You know, as a trader, what we're all looking for is a reliable signal, something that helps us stay on the right side of a strong trend. Well, today we're going to break down one of my favorites, a really simple two-candle formation called the thrusting pattern. And trust me, understanding its one critical rule can literally be the difference between catching a huge move and getting caught on the wrong side of a reversal.
We've all been there, right? You're in a great trade, the trend is moving your way, and then you see a pullback. Your heart kind of skips a beat. Is this just the market taking a quick breath for the next leg up? Or is this it? The beginning of a full-blown reversal that's about to wipe out your profits?
Honestly, getting that call wrong is one of the single most expensive mistakes you can make in trading. That uncertainty, that moment of hesitation, it's a huge source of risk. And that is exactly what a clear, rule-based pattern is designed to help us solve. And look, it's not just about the money, is it? When you misjudge the market's next move, it can seriously shake your confidence. It can lead you down a rabbit hole of second-guessing and bad decisions. That's why having a clear, objective signal you can lean on is so critical. So how do we get a clue? How can we figure out what the market is really thinking? Well, the answer lies in a specific price action signal called the thrusting pattern. It's basically designed to be a little tell, a clue that a push against the trend is actually weak, and that the original trend is getting ready to take over again.
So here it is in a nutshell. It's just two candles, that's it. The first candle, let's call it C1, is a strong candle moving with the main trend. The second candle, C2, is the pullback. It tries to push back against the trend, but, and this is the whole secret, it fails. It doesn't even have the strength to close past the halfway mark, the 50% midpoint of that first candle. That failure, that right there is everything.
The best way to think about it is like a game of tug of war. The dominant team, the trend, is pulling hard in one direction. The other team makes a big, loud effort to pull back, but they can't even get the rope back to the halfway line. This quote just nails it. Their failure to even reach that midpoint is all the proof you need that they're structurally weak. The dominant team is just absorbing the pressure and is still in complete control. And this is what's so fascinating. Look how a tiny difference in where that second candle closes completely flips the script. If C2 closes before that 50% line, you have a thrusting pattern, a really solid sign the trend is going to continue. But if it manages to close just a little bit further, past that 50% line, it becomes a powerful reversal pattern. The whole meaning changes. That 50% rule is the absolute, undisputed deciding factor.
All right, so let's really get into the nitty-gritty of this pattern. Understanding the specific anatomy here is totally key if you want to be able to spot it correctly when the pressure is on.
Now, I gotta admit, the naming can trip you up at first, so let's clear this up right now. The pattern's name, like a bearish thrusting pattern, is actually referring to this second candle, the one that's trying to push back. But the signal itself, the thing we care about, is always a continuation of the original trend. So a bearish thrusting pattern actually happens in a strong uptrend, and it signals that the uptrend is likely to continue. Why? Simple, because the bears tried to thrust downward, and they failed.
Okay, so how do you actually spot this thing in the wild on a live chart? It's a super simple 4-step checklist. First, you gotta have a clear trend. No trend, no trade. Second, find that big, strong anchor candle, C1, that's moving with the trend. Third, in your mind or on your chart, mark its halfway point. And fourth, this is the most important step, you check the thrust. You verify that the second candle, C2, closes before it gets to that 50% line. That's it, you've got the signal.
Okay, so you've identified the pattern. Now what? How do you actually put your money on the line and trade it? Let's switch gears from theory to practice and lay out a clear step-by-step plan for taking action. The most important thing here is you never ever jump the gun. First, you need confirmation. You wait for a third candle to actually break past the higher low of that pullback candle. That's your proof that the original momentum is back. Second, your stop loss has a very specific home. Just outside the first candle, C1. That's your line in the sand. If price goes there, the idea was wrong. And third, you have to know where you're going before you get in. Have a clear profit target in mind.
In this part, this is absolutely non-negotiable. Seriously, a pattern by itself is just a hint. You need the market to confirm it. For me, the number one check is volume. You want to see really low, weak volume on that pullback candle, C2, and then a big surge of volume on the breakout. That's conviction. And just as important, for goodness sakes, don't take the trade if the pattern forms right into a massive, well-known wall of support or resistance. That's just asking for trouble. All right,
be real. No signal, no pattern is a magic bullet. It's so important to have a balanced perspective. So let's quickly cover the pros and cons of the thrusting pattern, so you know exactly when to trust it and when to be skeptical.
So what's the trade-off here?
Well, on the plus side, it's easy to spot. It's very reliable in strong trends,
And it gives you a crystal clear way to manage your risk.
but on the downside, it's pretty much useless without those confirmation signals we just talked about. It'll get you chopped to pieces in a sideways market, and yeah, a big news event can just blow it out of the water.
Let's talk about a core principle of professional trading, managing your risk. The beauty of the thrusting pattern is that its structure lets you define your risk with incredible precision. And the rule is simple. You only take the trade if your potential reward is at least twice as big as what you're risking. A minimum risk-reward ratio of 1 to 2. No exceptions.
And really, this brings us back to the most critical idea of all. A pattern is just one piece of a much larger puzzle. Its power, its reliability, it all depends on the market environment that's surrounding it. In a beautiful, clean trend, this pattern is an A+ signal. But in a choppy, directionless market, it's just noise. Context is absolutely everything.
So, the thrusting pattern gives you this incredibly powerful clue, a sign that the big money, the dominant force, is still firmly in the driver's seat. But the final question for you as a trader is this. Can you look beyond this one little two-candle signal and actually understand the bigger story the market is trying to tell you? Because that is the key to mastering not just this pattern, but trading itself.